face aces. Let's have a great week. Hello, Patrick. How are you? Everyone doing okay? Hope everyone had a great weekend. So I want to start off with US dollar yen. I had this line drawn probably since here, looking for a 3-drive formation here. We did hold the divergence here, actually took out last week's low by a pip. So to me, that was a stop hunt. By 1 pip, this low took out last week's low. So potential reversal week on a 3-drive pattern. You had divergences on all time frames. There's a 1 hour. There's a 4, held it. And the daily was glaring, and we needed an update for the integrity of the divergence to hold, and it's done it so far. So looking at this right now, and I'm going to be interested to hear what the team is thinking, what type of level would have to be taken out for them to change their bearish view. I know they're looking for lower prices, but Greg and Blake sold it very well. So coincidentally, there's a 50-day moving average up around 105.85. And some of you know I pay attention to 2-week reversals. And to have a 2-week reversal, the yen would have to close over 105.95 by Friday. So you have a little confluence of resistance. So even if it's still bad, potential for 585 to 590. And if it gets through there, I think you could declare a bottom for a pretty good bear market rally. Of course, we have some risk coming back on today. I'm not convinced 100% that, you know, we're not going to get one more shot down here. Here's 1, here's 2, here's 3. But when I look at the big picture here on NASDAQ, which held up the best, I think people that have been listening to me for years on FX Street and everywhere else, what's missing here on this NASDAQ 100 chart? Why is it incomplete to me? Kurt, Patrick, Windsor, you know, Ziggy, you know. Why is the NASDAQ 100 incomplete? And it's just a theory, right? Any guesses? Because we've only had 2 drives. Okay, so I still think there's potential for another high in NASDAQ. The time between these 2 highs was about 6 weeks. So if we're bottoming in here today, or we have to do some work in here today, NASDAQ, just like it was the only one that made a new high up here, I think has a chance for another new high. 6 weeks out puts us into early May. So maybe it's going to be a sell in May and go away type of scenario in indexes. And thank God, Euro finally broke out. So now we're going to see what kind of follow through. Greg is looking for 26. So, you know, we should start to get it done. I wouldn't want to see the euro close back under this line and today's low, which is 23.50. If it's a breakout, I don't want to see it close underneath the 23.50. Everyone with me? Give me a YPR. Oh, Ziggy, you knew? Okay. Also, you know, as far as the majors are concerned, even though the pound's at new high, I am starting to get, well, we're not on the daily. We're not at new highs. We should get a new high. Why? And this is what's kept me from not being bearish. This is the other side of the equation that I believe in, that markets rarely peak when both price and momentum is confirming price. Therefore, this was a confirmed high. So it turned out to be a high, ABC, and we're going to be making a move to new highs. Everyone with me on that? Confirmed high, markets rarely peak when both price and momentum are confirming. Really, when momentum is confirming price, you could get a high, but not the high. Okay. And then one last thing, and you know, I know a lot of guys that did very well in it last week. It's the CAD, USD CAD, and kind of a similar situation in USD CAD. Up here shows better on the 4-hour. Confirmed high, right? So based upon my theory, there is potential for another high. The other scenario is that we're just going to put in a failing rally, maybe up around 130 and a half, 30.20, and it could be some type of head and shoulders top formation, but it also could, you could get one more high in Canada. So, you know, if you were short from last week, congratulations, that was a great trade. But looking for a pop, so if it's kind of strange, I'm looking for a pop in Canada, looking for a pop in the yen, and yet the dollar's weak. So those would normally be with some dollar strength. I really, the Dixie looks like it sure wants the lows again. I was looking at an intraday chart on the Dixie before I hand it off to Blake. Huh, can't find it. There we go. So down again today, 89.25. What was I looking at here? Yeah. Daily looks like it's rolling over, right? And we could get another test down here towards this 88 level, 87 and a half. I saw something short term earlier when I was looking at the market that we really shouldn't get through. Back through 89.40 would be the first warning sign that, you know, we're going to have a counter trend move, another move back to the upside. So if the dollar gets through this high, you see this, a lot of, it's a nice pivot point here. It's come into play quite a bit, right? Right here. Look at that. You got hits here, you got hits here. So if this is a breakdown, and I take it from here at 90.45, it's going to take us down to 88.40. All right. If I go up to here, that's going to take us back down towards 88. If this is the triangle, kind of a triangle move breakdown, but we shouldn't start closing even short term back over 89.40 for this to happen. Okay, and for us to break to new lows. So that's what I see this week. I have a great guest. I think one of the first guests I've interviewed that lives in South Africa, full-time Forex trader, portfolio manager, Corin Smith. I don't know if any of you have heard about him. Seems to be very popular, about 50,000 followers on Twitter. So I'm looking forward to talking to Corin today and meeting him and see what he has to say. And, you know, I used to be very interested in the Rand when I was trading things like ASA, gold shares down there. I don't think you could live in South Africa and grow up and not have an interest in gold. It's like growing up in Canada without having an interest in oil and mining as well. So stick around for Corin. He believes in automated to take the emotion out of it, so it's going to be a great interview. That's my forecast. I'm calling for a great interview. Have I ever made that forecast before, Blake?
They're all great interviews, Dale. It happens to be it's the host that makes the interviews. So.
Okay, thank you, buddy. So I hope you had a great weekend, and what I'd like to know off the bat, because I know you were really milking the yen on the downside all last week with risk off, what it would take to maybe change your mind that we're stabilizing and we could get a bear market rally there.
Well, you know, it's a good question, Dale. I'm sitting here looking at the dollar yen, and I guess the point, or not the point, the thing that I'm looking at is I'm looking at the fact that we haven't broke above this 105.30, which is the breakdown point right here.
Cool.
With the move that we've seen higher in risk appetite overnight. Now, I don't know if you listened to the week ahead video, but the week ahead video I talked about, you got to be careful of risk bouncing because we were at the 200-day moving average in the S&P. The NASDAQ completed a flag pattern. The Dow also was approaching the 200-day moving average, and I said, I would not be surprised if we bounce higher in risk. I was actually short the dollar yen over the weekend. I closed it at 104.70 in pre-market.
Nice.
And yeah, and it's rallied, but it's rallied back to basically previous support, which is acting as current resistance. And if you look at the Dow being up, let's see, the Dow's up 330 points in the futures right now. It's up 1.39%, and all you have is the dollar yen that has rallied from the open back up towards only 40 pips. So why? I guess the question that I have is why isn't the dollar yen trading at 106 right now? And
so would 105 would that breakdown, if it's negated, say we close over 105.30 or so, would you call it a false breakdown if it did that?
Yeah, I mean, it's questionable, Dale. I mean, I would give it all the way up to 106, frankly. This is because this is a triangle. You can see it right here, right? So the triangle breakdown point is at 106. So I mean, we could. I think if you're short, you got to be worried if we get above 105.30. But then really, people start to worry if we get back above 106.
Yeah, I have some stuff up there right around the same number you're talking about, 105.85 to 95. So, yeah, it might even be a great sell up there. You get a 2-day rally in risk, 2-3 day rally in risk, and then it shifts again.
Yeah, I mean, I think that's entirely possible. Again, I'm just surprised we're not higher in the dollar yen. So that's what I'm thinking right now. I mean, I sold some dollar yen overnight at 105.15. I had an order sitting out, and I got tripped, and I'm surprised that I'm not down in the position. So that's what I'm thinking at this stage in the game. But the one thing when you say, oh, it might be a false breakdown, but if you look at the overall downtrend of the dollar yen, I mean, this thing is just
started. Yeah, just started. Yeah,
it did. So I would be very reluctant to try to fade that right now. I mean, you can see the dollar weakness is coming through big time. We have this euro dollar that's broken above the 124. We've got the pound that, as you were talking about earlier, I mean, this thing looks like it's surging to new highs. I sure as hell wouldn't want to be trying to get long the dollar right now. It seems on a very slippery slope at this point in time. The dollar yen, I think one of the things that's holding it back at this point is that we're seeing so much dollar weakness elsewhere. So we're seeing now that's given obviously an opportunity for like the euro yen to bounce pretty nice. The pound yen's bouncing really nice, and these yen pairs are a little choppy at the moment. But I'm not too. I don't think I'd be too comfortable trying to be long the dollar at this moment. If you picked it up over the weekend, or I say over the weekend, last night, an Asian trade, and you picked it up down here at the 104.70, I would just be moving my stops up to break even, and just go ahead and plan on getting stopped out, because the longer we sit up here and not rally, if the market opens and we give back some of these gains in the stock market, which could happen pretty easily. I mean, you have to also imagine the trade war that just had started, and that is starting between the U.S. and, well, pretty much everybody, it's just starting. So, you know, only headlines that I'm reading this morning are, oh, stocks are up on, you know, trade fears subside. Well, you know, why are they subsiding? I mean, it's only going to get worse from here. So, you know, I wouldn't be surprised if we give back a lot of these gains in the stock market. And if we do, if we do, the dollar yen might be trading right back at 104.70. You know, as the stock market opens. So that's kind of what I'm thinking right now. And you know, one of the other things that if you think that everything's all good and we're and the stock market's going to be, you know, rallying to new highs here, I look at these commodity currencies like the Aussie and the Kiwi. They're underperforming the euro right now. And the cable. You know, that means that this, you know, trade war that we're starting with China is having, and it's going to continue to have a negative effect on these you know, Pan-Pacific type of currencies, you know, whether you're talking about the Aussie or the Kiwi or whatever. So anyway, I'm a little hesitant to be too bullish the dollar anything right now. And especially if the dollar yen, you know, you picked it up on a dip overnight because you watched the week ahead video and you're like, okay, I think risk is going to bounce and I'm gonna sell some yen. You got to be careful with that. I think you gotta watch those trades very carefully. I think you're trading counter trend if that's the case right now. So that's kind of what I'm looking at right at this moment in time, Dale. And I look at the euro dollar and it's extremely. I mean, this is bullish. I mean,
yeah, finally. Yeah.
Yeah, I mean, I assumed it was breaking higher, and we are now breaking higher. And I'm assuming I assumed we were going to break higher. Now we are breaking higher. Now it's just, you know, we get above 124, 124.50, and then you have to realize this thing is, you know, seriously probably going to break out. Risk continues to hit new highs. Let's see the S&P. Let's talk about this really quick before I switch over to Steve and we talk about the winners of our contest.
Yeah.
We're gonna discuss that here in just moments from now. I just wanted to make sure that we, you know, talked a little bit about the markets first. The S&P is bouncing back towards what I would assume be the breakdown point here around 2650. We're at 2630 right now. We hit a 78% retracement and bounce. The Dow probably has, I don't know, maybe a couple hundred points left in it before we get a little stretched here. So we're bouncing back to previous support as well. The Nasdaq, the Nasdaq is right around previous support. I mean, if you look at this, the breakdown point over here, but the Nasdaq has been outperforming typically, right. and that's also the case again today. Man, the Dow's up 358 points pre-market right now.
Maybe he's going to backtrack. You know, maybe Larry Kudlow could get him to backtrack. What I was reading, like over the weekend regarding the trade war, is that during trade wars, currency volatility increases dramatically. And the fact that the market, you know, volatility isn't really increasing in currencies the last few weeks, that they're not taking it seriously, that it may not be as dramatic. You know, Trump said 60 billion in tariffs, and what he meant was 6 billion for China, not 60. So, you know, he thought the 60 was a trade deficit, not the amount of tariffs that he was going to put on China. I'm just saying that I've never lived through a trade war before, so I don't know. I guess Bush #1 did it, but anyway, this author was saying that currency volatility would be much greater if the market was worried about it.
Well, I don't know about you, but I've seen a lot of volatility in the markets, but maybe that's because I've been so used to the benign market activity that we've seen over the last year and a half, I think, of, you know, with equities just ripping higher. I think the volatility that we're seeing right now is just much greater than we had seen in the past. But you know, maybe that's just me, you know. Just, it's, you know, it's like if you haven't eaten in a while and you eat a cracker and you're like, wow, it's the best damn cracker I've ever had. Well, you know, maybe maybe this volatility is subdued, but it just seems a little bit greater because of what the volatility we haven't seen recently. So all great points, Dale. And for most market participants, remember the grass is always the rainbow is always rainbow is always bright, and the sun is always shining. So, and so are the unicorns grazing in the pastures. Okay, so I want to bring in Steve, and Stelios. Hopefully Stelios is here as well. Good morning, guys.
Hey Blake, good morning. How have you been, mate?
Good. I'm still a little groggy, trying to wake up, but I'm here. But I'm excited because we get to announce the winners of our contest that we put on over the course of the last couple of weeks. So, do you want to tell everybody a little bit about the contest and then how we're going to announce the winners?
Absolutely. First of all, I have to say that it was an interesting contest. We had several hundreds people participating, and since we had some substantial movements in some of the markets, because we asked people to predict, we gave them some specific intervals, so they had to answer 5 multiple choice questions that had to do with Euro USD, USD Yen, WTI, gold, and the SPX. So, you know, 3 of them actually hit the extremes of our multiple choice answers, which obviously made the prediction quite hard, because I need to remind to people that we gave them the ability to vote Monday, Tuesday, Wednesday, and for them to predict where the market would be, you know, the next Friday, which means like 8, 9, 10 days after the day that they voted. And the market, you know, produced some very nice movements during these days. And, you know, what is surprising is that we had absolutely 0 people getting 5 out of 5. Perhaps,
that
as I said,
very surprising.
Yeah, although don't forget that if you randomly want to select the answer to 5 questions, you have, let's say, 20% of getting them, because, you know, each one had 5 possible answers. You have 20% of getting, like, you know, one of them correct. Multiplying that by 5 means that you have a chance of randomly getting all 5 of them correct. Like, what is it? 0.03%. Of course, here you needed to predict based on, you know, what you believe is going to happen. But as we've seen very often, it's, let's say, somewhat easier predicting where a market is going to go. But in this case, you also had to put in the time of the element of time, meaning that you needed to predict where the markets would go at an exact specific point in time, which was Friday's close, right? Which obviously it's not easy at all. So out of the several hundreds people, more than 800 people voted, we got 0 people that found all 5 of them correctly. We had a single person that got 4 of them correctly, which means that we already have our first winner. And we got 12 people that got 3 out of the 5. They guessed 3 out of 5 correctly, which means we had said that we're gonna as a first prize, we're gonna give a 6-month subscription. We already have that winner. We're gonna show his redacted email address, and then we're gonna roll among the rest to see the 12 people that got 3 of them correct, who is second and who is third. And everybody else, we had said that, you know, 10 people would receive, right, like ForexAnalytix memorabilia, like a T-shirt, a mouse pad, and a mug. But we said that, you know, since people that got 3 answers correct were 12. We're going to extend that to everybody. So
the 12 that picked 3, they got 3 correct, are all going to be winners. So we're actually giving away more gear than we originally thought, which means that since I'm doing the shipping, I'm going to be shipping more stuff than I originally thought, which means that I'm going to have to make multiple trips to the. Great, thank you very much. I'm fantastic. I'm glad I can take on that responsibility. So, Steve, I'm gonna pass the screen over to you. I'm sure you are going to be showing somehow, some way, all of this.
First of all, these are the winning answers that I'm showing as we speak. So as you see, 3 of them hit the extremes. It was the SPX, it was the USD yen, and it was crude, right? Only Euro USD ended up midpoint. And gold was, not midpoint. It was like the 4th out of the 5 answers. So these were the winning answers. And now let's see the winners. Oh, I'm only going to show the redacted email addresses here. Here we go. This is the person that got 4 of them correct. Of course, we're going to email everybody today, right? So you can, with instructions, so you can, send us back your address, etc. And now we're going to make a random roll between these people, which are the 12 people that got 3 of them correct. So we see who is second and who is third, actually.
So I saw the winner, it says .fr, so the winner is probably in France, I'm assuming.
Correct.
That's how it seems. Okay, I saw Canadian was in there because I saw the .ca. All right, awesome. And so, .za. What is ZA?
No idea.
South Africa, I think.
Well, I mean that's their currency, but yeah.
Oh.
Yeah, that's South Africa. So, and if I'm not mistaken, that's the one of the winners there. JAC is Jack. He's in our chat room. So.
Oh, Zach, yeah.
A lot of good guessers. A lot of good guessers.
So I just added the people that got 3 of them correct here, and I'm gonna press the randomize button. So the first 2 after I do that are gonna be first one that's gonna appear in this list is gonna be the second winner. Second one is gonna be the third winner, and I'm gonna write them down in another Excel that you can see here. So I'm gonna do it now.
All these Nostradamuses.
And there we go. So this is the second one. So one at hotmail.com is the second one, and Zach is the third one.
So Jack, in our chat room, he's going to get a free month of ForexAnalytix.
If it's him, yeah.
Yeah, I think it's him. I'm making the assumption, but it may or may not be him. So that's great.
So first winner is, let me show it again. This is our first winner. This is our first winner here. We didn't need to do anything about it. It was the only person that found 4 of them correct. And then the second winner, as I said, is, let me see, I wrote it in one. There it is. This is our second winner. And the third winner is this. So we're going to email you all afterwards.
And all the rest of you guys that are on that list, if you're watching right now, you are winners as well. You're going to be winning some ForexAnalytix gear. And so when those emails go out, the email will ask what your shirt size is. And unfortunately, the smallest shirt size we have is a medium. So if you're a male small, don't worry. The mediums actually fit. They're form fitting. So. Kind of, so it'll probably fit you. Maybe a little baggy, but will still fit you. So.
Okay, perfect. So I think it was an interesting competition, and as I said once again, interesting conclusions can be drawn from that. That predicting where a market, where multiple markets are going to be, even 10 days ahead, is a very hard thing to do, right? Very hard thing.
That's why when people ask me, where the euro is going to be next month, I'm like, man, I'm having a hard time just figuring out where it's going to be 15 minutes from now. So, let alone where it's going to be a month from now. That's why I don't like to do I see all these analysts that make their bold next year predictions. I'm like, you're just trying to make a name for yourself. That's all you're trying to do right there. Is really it's very difficult trying to predict that. So all right, Steve, well, thank you very much.
And by the way, Blake, another look ahead for people. This is from the test server how our new site is going to be, right?
Yeah. So this is what ForexAnalytix is evolving to over the next couple of months. Steve, you want to explain what they're seeing there so they know what they're looking at?
Yeah, absolutely. In essence, we are merging the analysis and the traffic light page for those that haven't been members of ForexAnalytix. ForexAnalytix for subscribers was 2 pages up to today. One page, the analysis page. I don't need to explain. Obviously, it's where you went to read analysis. For any kind of for any of the forms of analysis we cover, like macro, technical, harmonics, Elliott wave, basic technical, candlesticks. And the other one was the traffic light page, which was the page that had all the tickers with some brief in essence indications having to do with short-term, long-term biases, support resistance levels, and then you needed to press there and go to the analysis page to read the specifics. And now we're merging them, so the new design actually includes everything in a single page, and everything is modal. You can increase, reduce, maximize any part of the screen. You will be even able to pull them on a separate screen if you want to. So now everything is going to be in a single screen, and I think the new design is much more efficient.
But the charts are so small, Steve.
Oh yeah, you can maximize them, Blake.
Oh, how do you do that?
You just by clicking on them, they go half screen or full screen. That's not doable yet here because, as I said, this is a beta version. It's still work in progress. But once you click on them, they increase in size.
Great. Okay.
Substantially.
So it'll expand those charts. Great.
Absolutely.
Fantastic. Well, Steve, I think it's wonderful. I having everything on one page and being able to see all the analysis and read it all on one page without flipping back and forth is so much better. And it's really, this is for ForexAnalytix. I'm going to give you guys a little sales pitch here so you understand. And it's not, I don't normally do this, but this is one thing that I do want to say. We spend a lot of money on technology every single month. We're constantly developing, constantly building, constantly making the tools that we have better. If you look at most people and most companies that do what we do, they have a static web page. You log in somehow and you go to it's basically like a paid blog with a firewall. Okay, we have a technology company and we deliver the analysis via your desktop application, which, as you can see, we're improving it to make it even more useful for the end user. And then on top of that, we have mobile technology that we in beta right now. We have our new iPad application and tablet application. Next that we're tackling is we're revamping our mobile app to make it even better and more useful for our users, which I use our mobile app all the time. So the improvements that we're going to make is just going to streamline it even more for you guys. This is our commitment to you all as traders, that we're going to bring you the best technology and the latest technology all the time, and we're going to stay above any competition that's around. And because we're constantly reinvesting our monies back into our company to make it a better product for you. And that's our commitment to you guys. So awesome, Steve. And guys, I need to get hopping. I need to get to my trading because that's how I make my money. So I gotta go.
Perfect. Have a nice day, Blake. we have
Thanks,
a lot of
Steve,
things
and
to
hey,
talk about.
congratulations to all the winners, and thank you all for all of you that have participated. I think it's cool. I think it's fun. Now I've got to go start packing a lot of boxes. So,
Okay, mate.
all right. Thanks, Steve. Thanks, everyone. Thanks, Dale.
See you, Blake. Hiya, Steve. How are you, buddy?
Hey, Dale. I'm good. How have you been? How was your weekend?
Good. You know, March Madness. You watch any of it?
No. What's March Madness? Oh, you mean?
And he's a baseball fan too, or a basketball fan too. So, Steve, you should know what March Madness is.
Yeah,
Dale's got to explain.
Yeah, the NCAA championship.
Okay.
College.
College championship.
That's college. Yeah. That's college championship. Yeah. Okay. Got it. Good. No, I've never watched college. I'm watching NBA playoffs, but not college. Yeah.
Oh, so exciting. All right. So what are you thinking, Steve, here in risk coming back, short-lived? Typically, bear market rallies are very sharp and short-lived.
Let me begin by saying that. Let me
Go
begin by saying that people that read our weekend analysis have already seen this chart. This is the SPX chart, and
how about turning it back to Friday live when we were higher on the day? Let me quote you. I'd be very careful about trying to bottom pick this market. That was Friday when it looked like we were putting in a reversal day to the upside. And you were spot on because it collapsed after that.
Indeed. But you know something, I also had a reason to believe that we might get a bounce from here. That's why, if you see the SPX analysis, I had extended this channel because we have a confluence of supports. We had a confluence of supports at the low, which was what? It was the support of this broken channel, and it was the 200 DMA as well, right?
Again.
So, yeah, again, correct. Again, this is the third time actually it works. So, you know, we had a nice confluence of supports here. Obviously, you know, a strong rebound from here doesn't necessarily mean that that was it. That was the end of this corrective move. At the very best case scenario, I will reiterate once again that I believe that we might see several days of choppy price action, perhaps because we can view this as a triangle as well, right? I mean, if you take this line and you take this line as well, roughly you have a triangle. So, you know, we might have like more choppy consolidation within the triangle, but there is no question about it. If we break below here in the 200 EMA, then we're heading for the next scenario, which is a move towards either 2480 or 2400. For the time being, risk is on today. There is no question about it. The market got a little bit more optimistic today that okay, things are not going to be that bad, and you know the trade war is not going to be a full-blown situation, etc., etc. So you know we have some big candles today so far. I mean, for example, the Nasdaq is almost 1.8% higher on the day. Here's the Nasdaq, by the way. I would be very carefully watching 6,700 roughly for Nasdaq. We had some lows here to 6,750. So I think that's that's a key area for Nasdaq. If Nasdaq wants to resume its move lower, it has to hold that area, in my opinion. Having to do with the SPX, I would say that we are approaching an area of interest, which is the 2,640 to 2,645 area. That's an area of interest. That's some good resistance. So we will soon know what risk wants to do this week. But I wouldn't be surprised if we get a couple of days of a bounce and then we get rejected once again, right? It is a quite high probability. For now, we have to respect today's positive mood. I don't think we're going to end up closing negative on the day. We are already pre-market a lot higher, and I think that today is going to be a positive day for stocks. Now the question is how positive. Nobody can predict that, but tomorrow it's Tuesday. We have the other turnaround Tuesday. Let's see. Perhaps we get another move lower tomorrow. But for now, As I said, some strong supports are holding, and as long as that's the case, there is still the chance that we're not breaking down, we're just consolidating in a large triangle. Now, having to do with some popular pairs, I have to say that, this is obviously not a surprise here, but Euro USD is testing this bull flag's resistance. In my opinion, if we actually close above 124, we most likely have already resumed to the upside, where the next target is 126. We are also seeing the equivalent move happening in the RSI, as you see. The RSI moved lower. It worked off the overbought conditions, and it currently seems to be resuming to the upside. So Euro USD looks very good. Needless to say that cable has been looking very good since several days ago, because it has done the move above an equivalent bull flag. In my opinion, new highs are coming here. An attractive target is at least a 50% fib from the move lower that started up here at 171.70. It was the summer of, let's say now that the tradable low above 137. I do think that the cable is moving higher, and it's headed, a huge part of the DXY in combination. Euro USD on its own is like 57 or 58%. Add to that the cable, so we're talking about at least 2/3 of the DXY is the two of them. That means obviously that I cannot be bullish the DXY, right? Because I'm seeing clearly patterns that show new highs coming there, and the DXY, despite rebounding from the exact confluence of supports we were looking for, has managed to tread water more or less. I mean, it has produced an expanding triangle. It hasn't even managed to break above the 91 area, which was the first area of resistance. And in all honesty, I don't believe that there is anybody that can view this pattern as an impulsive bullish pattern, right? I mean, this is clearly a consolidation. This is clearly a corrective pattern, and the chances of a push higher are substantial, are very, very high, in my opinion. So I'm seeing here, a very high chance that the DXY wants to print new lows. Definitely, as long as we hold below 91, there is no question, since the trend has remained a bearish one since the very, very, very first days of 2017. So it's already like 15 months that the DXY has been in a very clearly defined downtrend, right? And we need to respect that. Also, the exact opposite of what we saw in the Euro USD, as you see, the RSI has worked off the oversold conditions and seems to be rolling over, breaking below this trend line as well. So I'm really not optimistic about the DXY. Now, I've been saying for a long time that I believe that at some point the dollar is going to mount a very strong recovery against the majority of beliefs and positions. And I still stand to that opinion, but I have to be honest. I think that has to happen, from a new low, because that's how it looks now. So perhaps we need to push once more to the downside, get even more people bearish the dollar, and then getting some kind of a reversal and a bigger correction than any of the corrections we've seen so far during the past 15 months. Now, let me also have a brief look at the USD yen, although Blake already, which is a nice reversal candle, but for the USD yen to be out of the woods, it needs to do a lot more than that. I mean, just for comparison, just look how higher, we are just 0.3% higher when, for example, risk is much, much higher. everywhere else. So the USD yen still doesn't show, that doesn't look good at all, honestly, it doesn't. So I would refrain from being bullish the USD yen. I of course see the possibility of a rebound, but I think you shouldn't get enthusiastic about it. I think that the risks are still tilted for a resumption lower, especially considering that we've had a major technical event, which was the breakdown from this triangle's support, like a very, very long term trend line that got broken to the downside. So yeah, there is a potential for a rebound from here, but in all honesty, I would be very, very cautious. Okay, very cautious. So I think this covers more or less the majors. Having to do with the Aussie and the Kiwi, not much have happened. I'm going to show those and the USD CAD, and then we can go through questions. Aussie, is still in a descending channel, is still near a very important trend line. If we break below there, I think it becomes, quite bearish. And as long as we're holding this 76.40 area, another rebound to the upside is definitely not out of the question, especially given the fact that the Kiwi is also showing that it's holding much, much better. Of this 71.80 area, you have to respect the potential for an upside. Now, having to do with the loonie, the USD CAD, which I'm still short half of my, ideally I would want it to hit 128. I'm going to get rid of the rest of it there as well. As long as we remain above this area, though, you have to respect the potential for another push higher, right? So we did get a rejection from the exact area confluence of multiple resistances that we had, so that was a perfect rejection. But has it confirmed that that was a high, that was a short medium term high? No, it hasn't, right? We would need to at least see a breakdown below this support, and we haven't seen that yet. So I don't think this is the place to be shorting the USD CAD because we have no confirmation yet. Okay, so that's it with the majors. Let's go through a few questions, and I'm sure we're going to get a lot of ideas about what people want to see. Let me open the question box. Let's go. Good morning to everybody that says good morning. Daily close over 124 says Dan. Yeah, Dan, I said the same. I agree with you. Daily close above 124 for the Euro USD is a very bullish development. There's no question about it. I've got a different kind of question. The USD CHN is going down. The USD HKD is going up. Both are controlled by China. So why are they going in opposite direction? Do any of you know why? Ziggy, in all honesty, no, mate. I'm monitoring both of them, I can tell you that much. And we've had a look at them multiple times. By the way, I have another question for USDC and CNH, so let's have a look at it. Okay, first of all, this is the last time that we looked at it. We said that this is a triangle. As you see, it has been several days since the last time we looked at it, because look how much we had extended this trend line. So if we extend them even further, you're going to see that, yes, it was absolutely a triangle. And what's happening currently with it? Breaking lower. That's exactly what you should be expecting from triangles. Resuming in the direction of the trend, right? So having to do with USD and the Chinese yuan, in all honesty, there is absolutely no reason you want to be bullish. We're just breaking down from another triangle. This was clearly another consolidation. And the next area of support is the 78.6 at 622. But in all honesty, I see absolutely no reason why we wouldn't completely retrace this move higher and get all the way down to almost 6, right? As you see, this is a well-defined downtrend. We haven't even seen any major rebounds. Every correction is just a consolidation. So when a market, instead of correcting higher, is simply consolidating before the next move, you can see how weak, or if it's an uptrend, how strong it is. So in this case, you can see how weak this market is, right? USD is very weak against Chinese yuan. So keep looking lower. I can't answer that question for Blake. I don't know if Blake is here. Hi, Blake. Do you think as an American you have no right to fight for fair trade? Okay, I can't answer that. I'm not an American. But as an economist, I can tell you that what a fair trade is a big discussion to begin with. And believe it or not, sometimes for trade to not be fair, it also has some advantages, right? So for example, obviously China hasn't been playing right, having to do with trade and patent stealing and everything else. But I can tell you one thing for sure, is that it definitely helps lower and medium income families, the fact that they can buy Chinese product at a very low price. So sometimes a trade war will end up hurting the weakest part of the population of the country that puts trade tariffs and barriers, right? So you have to keep that, you have to take that into account. Going to get better on the traffic light page. Yeah, absolutely, Ed. About the scrolling one. Yeah, it's going to be completely different. Dan says that Kiwi is a short. I think that Kiwi isn't a short yet, mate. Pound Aussie and Pound CAD. Let's have a look at them. Let's have a look at the euro and the pound crosses. Actually, since you're talking about them, I'm going to start by having a look at the euro crosses. There we go. Euro Aussie still pushing to new highs. We had said after breaking above here that my target was the 161.8. I think we will be getting there, and we might get some type of a pullback afterwards. But as long as we remain above 157.70, the trend remains higher. There is absolutely no question about it. Now, here is the Euro Kiwi. Obviously, the Euro Kiwi underperforming among all the euro and pound crosses with commodity currencies, the popular ones at least. The Euro Kiwi has been by far the weakest. It's currently stuck because on one hand, it's holding this ascending channel support, but on the other hand, it hasn't pushed new highs, and it even finds a very hard time in pushing through this 171.20 30 area of resistance. So I think the Euro Kiwi is by far the best short among them, right? Not yet. Point. We get something like that. And so you have to respect the upside. Keep in mind, though, that it's due for a bigger correction at some point. It might even happen from here. I mean, we might roll over and push once more to the downside. I would want to see a move down to the 38.2, anywhere between, let's say, 156.40, 156.80. I think it's a nice area for support. We haven't made it there. So, the EuroCAD remains definitely very well bid and, in an uptrend. But as I said, I would want to see a bigger correction before we can discuss about, trying to buy it. RSI divergence also clear here, right? Now, having to do with the pound crosses, these have been very, very strong. Starting by the pound Aussie, which I'm lucky to be still long. Unfortunately, I never managed to add, so I have only 1/3 of my initial position. But regardless, it's now exactly 400 pips in the money, so not bad. But as I said, I only managed to catch a very small part. I wanted to get more. I was hoping for a pullback down here. Never happened. I was hoping then for a pullback there from somewhere here. It never happened as well. So it seems that, you know, it remains extremely strong, and the next target is the 161.8 at 185.50. I think we should get there. So nothing more to say here. Pound Kiwi also seems very strong. I think it's quite clear that this looks, even if you go down to a smaller time frame, this looks like some type of a pennant, bull flag, whatever it is. I'm expecting that it has a very high chance of resuming to the upside and you know, even pushing to new highs, if not at least testing the previous high at 198.40. Okay, and let's have a look at the pound card as well, which has also been a monster. It has overthrown this ascending channel. It found support. It penetrated through this area of support resistance and actually came down to test the support. And I have to be very honest, this also looks like a bull flag. There it is. And we seem to be breaking above it, actually. So it still looks very strong. There's no question about it. The next, you know, serious upside target is the 61.8 of the move lower, which comes at 189.60, which means it's a lot higher from here. Can we get an analysis on crude from both Dale and you, please? Thanks, guys. Yeah, absolutely. Let's have a look at it. We said several days ago that we had two scenarios about crude, but the scenario that crude would push straight to new highs from there was the prevalent one once we broke above this triangle, and I think that's the case. Actually, crude, as you see, tested today once again. The thing that printing a new high is very likely. I'm monitoring 69. Why I'm monitoring 69? It's the 127% extension from this move. Might even make it to 72 at some point, the 161.8. But there's no question about it. As long as we remain above this low now, the $60 low, crude remains bullish. At some point, it's going to move lower, and seeing the last COTs, positioning is extremely bullish, and sentiment is extremely bullish. So I have to tell you something. I'm looking for a new high in crude, but it's the exact opposite for what I said about the DXY. At some point, I believe that crude is going to reverse, and due to one-sided positioning, once that happens, we're going to see, you know, very big moves, very big counter-trend moves. Okay, so keep that in mind. Copper, let's have a look at it. Dale, if at some point you need to start, you let me know, right?
Yeah, 2 minutes, bro.
Okay, perfect. Okay, copper at a very critical juncture here because it's testing major support. So in my opinion, you know, so far so good. I mean, so far this could have easily been a corrective move lower because it's choppy and overlapping. But things are going to start getting serious if we break below here. So, you know, very critical area. We're going to revisit it tomorrow. Very critical area for copper. Keep that in mind. A question about the Nifty. There is no problem, mate. You know, I'm gonna have a look at it with pleasure for you. As you see, Sunil, I was right that there was more downside left in the Nifty. Actually, the formation ended up being a triangle that got broken and retested. Initially, we were looking for the potential of a bear flag. It ended up that this was a pennant, right? Ideally, my target, I wanted to see one more low after the break below this consolidation. So ideally, I would want to see it down to 9,700, but we have already satisfied the minimum requirements. So, you know, finding a low even here is not going to be a huge surprise for me. Of course, I can't turn bullish yet. I mean, we're below the 200 EMA, we're below that low, we're below this area. I would say roughly that this 10,300 area is quite important. So, you know, I would still maintain a slightly bearish bias towards the 9,700. But as I said, now that we've printed new lows, I wouldn't find it impossible to reverse and, you know, continue higher. So I'm more or less neutral now. I was bearish the last time you asked me. I'm tilting towards, I'm slightly bearish, but towards neutral now. Okay, so that's my point of view about the Nifty. And the last ones, Euro Yen and CAD Yen, and then we can go the interview. Euro Yen, unsurprisingly, rebounding from the area of support that we had indicated, because we had said when we broke below there that the next target is just below 129. It's also the 38.2. So we tested the 38.2 on Friday. We seem to be rebounding today. Still, to be out of the woods, we need to break above 132.30. So in no man's land at the moment, but no surprise that we're rebounding from where we are. And now, last but not least, the CAD Yen, one of the weakest currency pairs during the past few weeks. And even the rebound, as you see, has been very weak. It is rebounding from a very important area. As you see, it was these lows, but in all honesty, it remains one of the weakest yen pairs. So in my opinion, looking for a rebound in yen pairs, CAD should be the last one you should be looking for, okay? You'd rather find something, you know, stronger if you want to play it counter trend. I don't know, the pound yen, for example. Okay, and speaking of the pound yen, it's an interesting pair. We're going to have a look at it tomorrow. Thank you, Dale. Enjoy your interview.
Good segue. So be here tomorrow to look at that yen cross. Corn, welcome to Face. I'm going to make you the presenter, buddy. Looking forward to hearing your voice and seeing your screen. You have the option to screen share to show some instruments if you'd like, and your website at Unum Capital.
Technically speaking, it's not exactly my website. It's the company I work for.
Well, that's what I mean. Okay. All right. Well, nice to meet you.
It's the company that does my licensing. In South Africa, you need to actually have a license to give any sort of financial advice.
Wow.
One can say it has to happen that way. But in South Africa, for a fact, you definitely need a Category 1 license to give advice. You need a Category 2 license to actually trade for people. I am one of only 2 people that's allowed to trade Forex at this point in time for anyone in South Africa.
Only 2 people in South Africa are licensed to trade FX?
Well, are licensed to trade FX for someone else.
Oh, huh, interesting. All right, well, it's the only country that's not saturated then. Good call by God for you to be born there and love FX and be one of the only ones there.
For FX, I'm gonna agree with you. I'm not too sure about the rest.
All right, Corn.
But we managed quite a few.
Okay, well, you know, I know where you're at now, and you know you are an FX trader, and it says you're also, you know, with your license, a portfolio manager. What I'm always interested in, and I believe that our viewers and listeners are too, is how you got started in the business. What was it like for you at the beginning of your journey to become a trader?
Whoa, it was difficult at first. I had such a lot of information wrongly given to me. You must, the listeners must excuse my English. It's obviously an African, Southern African English. So I'm going to try my best as relevant as possible. But it was very difficult. In South Africa, we don't have a lot of information. We don't really have decent mentors willing to give you the time of day when it comes to FX. when you come to portfolio management, these clients, they generally come to you because of a lack of information. There's no one really in South Africa willing to take on Forex and teach it that's not scamming people.
Wow.
It's
okay.
Really, we have a
But
lack.
You guys have unlimited access to the internet, so I mean, you can.
I'm actually very happy that we've got internet to actually talk to you today. We are lucky to have. I had a satellite put outside to make sure that this session does not go down wrong. We've got very limited internet. We're just discovering fiber. We've got copper cables everywhere. They get stolen. It's always a problem. So it's amazing.
All the wealth that the country had from natural resources all these years, that it almost sounds third world to me.
It is. It has gone from first world to third world in maybe 5 years' time.
Okay, so that was going to bring me to a question. I mean, you're going to tell us about the beginning, but with all the political strife happening in South Africa, has Iran disconnected from following gold prices, and it's more
politically oriented, and the problem is it's more based on hope now. It's selling the dream, or buying the dream, selling the fact. It's no longer buying the technical analysis. It's now rather buying the dream, because we dream and we hope that the last few weeks have actually brought us to a point where we will start gaining international traction, and we will now fix whatever has happened wrongly over the last 10 years or the decade and a half. But you know how that works out.
It doesn't take long. It doesn't take very long for having the wrong leadership in your country to ruin a country, does it?
Exactly. And right now, up until this point in time, leadership has ruined this country. It has. We are nowhere near any form of progress on the political front at the moment. We are hoping. We are praying and we are hoping. And that's about the best we've got. We've got no substance.
Well, I'm praying and hoping for you and your countrymen too, Gorn. So, all right. So you didn't have much access to the internet. So you're probably very much self-taught, or did you have any books or anyone influence you on your style of technical trading? I did read your bio, and you do believe in automating things. So I'm just interested if there were, obviously use candlesticks. Was Steve Neeson an influence in your trading? He's kind of the Americanized version. Huh?
Steve Neeson was one of the biggest contributors to my candlestick trading. As you can see by the screen I shared, that I don't really believe too much in indicators. So I like a naked chart. I do use a little of MACD just to see where I'm at. But Steve Neeson has been a very big offer in my life to get to the point where I am now. Given the fact that I've been busy with this for 8 years, and I actually only got my license 2 years ago. Okay. This has been a real journey. It has been a real journey. Right now, where we're at the moment, I manage about 35 million rands of assets. That's about $3.2 million worth. Yeah.
Okay.
And if you take South Africa versus America, that's quite a large sum of money. Our entry-level hedge fund managers manage about 50 million rands. So when we look at it in that form or that aspect, for someone alone at home working under one Unum Capital, that's quite a large amount of assets. So we work.
Congratulations.
Thank you. It's been
I'm going to guess that you're getting good performance because that's what people chase, and they're chasing you because you've been trading well. How many years did it take you to make a breakthrough to start being a consistent performer? Everyone has drawdowns, but for you to be able to say, you know what, I've got it now? How many years?
For almost 5 years, eh?
You know what? I get that a lot. It's almost like a college degree, but worth a lot more.
And I want to almost tell you that it was mostly psychology.
Yeah, it's not. It's all in our heads. It's not your system. It's not your method. It's all in our heads.
The system would work on off. Sometimes I would just let it go and try something else, come back to the system, redo it, and then once again get into the flow. The system would never fail for prolonged periods of time, but psychologically, the mind would fail for prolonged periods of time.
Yes. Okay. So you made that decision. So tell us how you automate your FX trading. You know, when I was young with a bigger ego, Corn, you know what I used to say about systemic trading or systems? I used to say that they were for people who didn't know how to trade.
I used to start out with that same feeling. The difference would come. The difference would come at periods of peak drawdown. At periods of peak drawdown, you would start to introspect and twice decide about the same trade that you would have taken yesterday, automatically anyway.
Your confidence level, yeah. It's you know, how do you manage yourself during a drawdown? Not your system. How do you manage yourself? Because isn't that when you were going through a drawdown? I know amateurs do this. They increase leverage. They blame it on an instrument. Say, "Oh, I'll never trade the yen again. The yen burned me." But it wasn't the yen that burned anybody. It was your decision process. Or they'll give up what they've been using for years and get on the journey for the holy grail that doesn't exist. So that's when people blow up. They'll average out. They won't put stops in. So how did you manage yourself during some of your worst drawdowns psychologically? How did you come out of it?
First of all, I couldn't manage it at the beginning. I really had a tough time. Some of the guys at Unum Capital used to explain to me how they handled it. And one of the biggest things I looked at when going through a drawdown was Bill Dunn. Bill Dunn, over the years, and I mean, he's had a illustrious career, has had some big drawdowns, but he's made it. And he's made it so great that the difference between us and it's someone like Bill Dunn is he's made it already. We just need to hope that we could get there at any point in time. And some of his drawdowns has been 47%, 52%. This guy's really made it. He knows how it is to work through the hard times to get to the good times. Now, if we look back at 2016, the 7th of April, euro dollar broke out. That's the day, and it's defined in my memory for a specific reason. I'm a predominantly euro dollar trader, and that's the day I don't believe this, but it happened. And since then, it's been an uphill battle. I've had some trades underneath that 7th of April margin. I've had it there at 1.06 actually. I've had some sells there at 1.06, hoping that it would come back. Hope does not work in trading. Hope doesn't work in trading at all. And the only thing that brought me through this drawdown process was buying the euro dollar when I knew it was going up from here on in.
Right. Yeah, sometimes it takes pain to be on the other side of the trade to know you're the wrong way, and to reverse, it takes a pro to reverse. But yeah, I agree with you. I say hope is the oxygen in our life and the carbon monoxide in our trading.
Exactly. Exactly that.
Okay. You probably reversed right before the what was it, the French elections that left a breakaway gap that really started to accelerate appreciation for the euro.
Exactly.
Correct? Okay.
That's perfectly said.
Oh, well, nice call. How about now?
Well, at
what have you done for me lately? What have you done for me lately, Corn? Have you ever heard that?
Well, yes, I actually do that on a daily basis. So let me show you what I've got. Let's bring up a decent screen. Let's see what we have. This is euro dollar on a weekly time frame. Now, exactly the same thing that your rather English commentator of the previous podcast, if I can call it that, mentioned that when he said he doesn't know where euro is going in the next 15 minutes, let alone over the next 15 weeks. Now, this is kind of the same thing. With Donald interacting with it on the dollar side of the euro at the moment with euro dollar, we don't know. He's made a lot of indifferent comments, if I can put it that way, over the last, let's say, 3 months, and which has sent this in a rather indifferent direction where people would have thought it's not that. What we can see here right at the moment, let's just quickly look at the chart. If you can see the chart, we're going, this is where we're going, and this is my count at the moment. Okay, and I want to say
so you use Elliott's as one of your tools.
I use Elliott's as one of my tools. It's not my major tool, and the reason I say that is I'd rather look at structure than actually counting an Elliott wave, and I'll come back to that in just a second. But if we look at this, there's a yellow highlight at the bottom here that says 26 May 2014. Do you see that, week 22?
Yes, I do.
All right. So the longest wave is always the third wave. So I will always go back there and count the longest wave that I can see in let's say a 5-year structure to start the count. Because if you have 9 Elliott wavers in your room, you'll probably find that 8 out of those 9 will count indifferently. They will not get to the same point. The only reason
they'll give us 3 options. So we'll have 24.
Yes, they will, and they'll give you 3 options, and they'll give you a very good reason why it didn't work out the way they thought it would. They'll give you a very good reason for that, but that's after the fact. So the point here is I always try to find the longest wave, and then we'll count from there. So there you can see wave 3, A, B, and then C. So where we are at the moment, I believe, in euro dollar is I want to see a climb back to the uppermost trend line, the yellow trend line, there where C5 is marked at, and then I will short this from there.
Where's that coming in? Where's that come in for you, Corn? About 126, 127?
126.95.
Okay. I like the picture.
I will then, well, in my case, I will then remove my hedges. As I'm a hedge trader, at that point in time, I'll remove my hedges. And then I will put a re-hedge at 127.105. The only reason for that is calculating spread. I use my own broker. I'll calculate in spread. So I want to be at 27.100 to see if I'm wrong. If I'm wrong, I need to take it like a man. I'm wrong, we start afresh.
Would any level, what level would tell you were wrong? Would we have to go to 130, 130? Huh?
No, 127.100 would tell me that I'm wrong. That would be above my true line. We would see new buyers anticipate this, and we'd definitely see a weakening dollar. However, if I cross the basket, I see that I believe that 2018 will be a year for a stronger dollar. The same rhetoric your previous person that was in your podcast had the same rhetoric. I do believe that this is the year of the stronger dollar, but if I'm wrong, I need to accept it, and I'll accept that at 127.100. Then I'll accept that I've got a weakened dollar for this year as well.
Well, I've spoken to a few people that kind of have the same similar idea. In fact, a few of them after that are thinking euro could trade back down to 116. Is that in your ballpark for a downside target?
Even 112.
Okay.
If I can have a break of 1.1581, I'll take it all the way down to 1.12300.
Is that going to be, you know what, the big question is that going to be happening because of risk off or a flow back into dollar-denominated assets?
I believe it'll be a flow back into dollar-denominated assets, and I'll tell you why in a very simple word schematic. When we look at the DAX of the euro,
man. You know what? You're great. Every question I have, you've been thinking about these things. So, all right, go ahead.
So when we look at the DAX is normally traded in a euro denomination.
Right.
So technically speaking, when we look at the DAX, we look at an opposite of the euro dollar. The only reason for that is there are many US dollar denominated accounts that actually want to trade the DAX, and they need to convert to euro before they apply money to the DAX. So when we've got an outflow of the DAX, we generally see the euro getting stronger because people get their money out of the DAX into the euro, and then they select the denomination to which their accounts are. Now, on this side of the water, it's very simple. When we've got a rand-based account, we need to first convert it to dollars, then convert it to euros, and then trade the DAX. And that's a problem. So what we do is we'll take the money offshore, we'll input it into a US dollar denominated account, convert it to euros, and then trade the DAX. Still the same problem. So when we see money flowing out of the DAX, like currently out of the S&P 500, that money has to flow into euro. Out of the S&P 500, it normally flows into US dollar. So we'll look at the DAX and we'll say, when it flows out and it flows into the euro, we'll get involved. Then we'll short the euro. The reason for that is simply because of the way that they convert the cash from euro to dollar, because most people do trade in dollars in my world. In Forex, we trade in dollars. So if we overlay the DAX index and we actually add it to euro dollar, you'll see that it's quite moves away from each other, and it has to come back to me. So when it's at farthest points away from each other, this is the point in time where we will start to look at euro dollar shorts, for the only reason being profit taking and coming back to me. And I know people have spoken about this, and it's not a technical asset as such. But once we do our technical analysis, I will look at where the DAX is at when I'm trading the euro dollar. I'll definitely do that once a week at least, at the minimum.
Okay, and a strong euro is negative for the DAX, and a weak euro is positive for the DAX. So if we're about to put a high in the euro at 127, the DAX is a buy.
Perfect. And I've actually written an overlay if you or your clients want.
What about the U.S.? What about the U.S.? What do you think, Horn?
Exactly the same thing applies. Now, I would never trade the S&P 500. I'm not confident enough to understand it, but I will trade the DAX versus the euro dollar.
Okay.
And that I can actually give you. It's a template for MT4. We mostly use MT4. I can give you that template, and it will show you why I make the decisions that I make.
Okay.
And as you can see on my screen right now, I have a buy on 1.22945, and I've got a buy at 123.95. The only reason I don't have another buy is because I haven't seen this return to mean yet. So I will not take another buy because I believe this is for now a top. We need a little bit of a correction, and then I'll take another buy on the way up.
Okay. All right. So you've given us some big picture stuff, and mainly what you're mainly a euro trader.
I am.
Okay, and we're approaching a potential inflection point in the next few weeks, and that would be one heck of a move back down to 112. That would probably take the Dixie back to what, 97?
Yes, 97. Around, yeah.
Yeah. And let me ask you this: will commodities that are trying to base get hammered with a strong dollar, or will we possibly see metals and oil doing okay despite a strong dollar? What do you think?
I believe metals and oil will do good despite the strong dollar because of the political risk currently involved.
Okay, and what
right
do you
now, metals need to do this, and although I am a very stern supporter of the current American president, and I've got my own reasons for that, but I am a very stern supporter of him. So mainly because of what's happening in my world, in South Africa. But besides that, having set that aside, the guy is good for the economy. Whether the liberals want to see it or not, it doesn't really matter. What we see on the charts tells us that this guy is good for the economy. We had to have a correction in American equities. We had you couldn't see past it. It had to come. So when that correction came, some people would have had to withdraw their money there because they got scared, and that money had to flow back into the dollar. So before this whole contemplation is finished, the money still needs to flow to the dollar, but that's only half of the reason that I believe that we've got a strong dollar for 2018. Except the rhetoric from.
You think it's going to be You think it's going to be a hot military conflict that's going to drive this dollar rally as a flight to quality, and maybe that will be successful at one of these military adventures?
Well,
because you were talking about geo risk. You said gold can go up even if the dollar could go up because of geo risk. So what's the geo risk you're looking at?
Well, at the cost of sounding
alarmist,
yeah, maybe let's use that then.
Hey,
well, at the cost of that,
it's our interview. Go ahead. You go and tell us what you think.
At the cost of that, let's say that to bring it back to mean the news has to come out wrong for the president, then this is going to be the kind of situation where he's taken on China. China has said no. We all know how much debt China holds for USA. We know that. We follow this on a daily basis. But if China says this is the problem, and everyone keeps on blaming a different country, in the end, the truth will come out. And here, if you can see on the chart, this is what it looks like. This is Germany 30. This is the DAX we just spoke about. Now, if we look at this on a daily time frame, and I want to explain this because news is normally the trigger, but it's not the answer. It's only the trigger. If you look at this, this is the daily time frame for the DAX. And if I had to extrapolate this forward, I would say that before June, here, in this corner here, before June, this has to make a change in direction. And there's a few reasons why. Let's have a look at the reasons why. Here's support, and I'll tell you now how this ties into Donald. Give me a second. Let's just quickly do our fibs here. Right. Oh, let me just fix that. And there's a reason for this. Fibs cannot just be drawn in price, they can be drawn in time as well.
Yeah, I like that.
Yes. And this is where we're gonna get our answer. Let me just show you the answer quickly. Just remove this. Come on. Excuse me, I'm working into a VPS and the internet is slow.
Okay. Someone's saying that.
Very slow. There we go. So let's quickly fib this for a retracement. And then let's quickly fib this in time. So, time zones.
So we rally into June.
And there's a reason that this would happen. So to facilitate this, a few things have to happen. And if you look at what's happening currently, there's an answer in here somewhere, and we're going to trade it. The only question is how long would it take? and I'm willing to bet my shorts that it's between now and the 1st of June. Let's see another answer to the same question. Do you know where the VIX is currently?
This morning, Corn, I was looking at the NASDAQ, and between the two highs, the last high we had, there were 6 weeks between them. And I said, well,
Yes.
6 weeks from the NASDAQ's last high would take us into, oh no, that would take us into May, early May, 6 weeks from now.
Yeah, 6 weeks, early into May, almost medium May. But do you see the VIX futures open interest on my screen right now?
Yeah, the VIX, yeah.
That has to tell you something. There's definitely something brewing. The question is, we're not sure exactly what it is. We are waiting for it, but we are not sure exactly what it is. I'm willing to bet that the VIX will turn here at least to 0.45M, and then give us another chance to enter the VIX long just before that medium May, end of May situation. Question is, what's going to bring it forth?
Okay, go ahead. What do you think is?
Well, it can only be political interest.
Okay,
the seasonal development has passed already.
The Mueller investigation goes away?
I would agree to that. I would also agree to the fact that maybe Kim has a different issue, and the Chinese decide that they will reduce the amount of debt that goes to the USA. But that's coming from someone sitting in South Africa. Yeah.
Okay, that Kim wants peace? Is that what you're saying?
I think he would.
Okay.
Does he really stand a chance? No, he doesn't, and he knows that. He's not that stupid. He knows he doesn't stand a chance. And right now, I'll be the first to tell you that I believe that the current president of the United States is going to create MAGA. He is. He's doing all the right things, contrary to what the left believe. And I don't really care what he does or what he doesn't do. What I care about is what my charts tell me, and this is what my charts tell me.
Okay, so we should be looking for a turn here shortly. Maybe it was Friday. Maybe it has to do a little bit more work. But you're looking for a bear market rally in the DAX and a top in the euro. If it starts closing back over 127.10, the picture is changing. And basically, we're going to have 2018 could be the year of the dollar. It could resume.
I believe so. I believe so.
And maybe how about halfway back in the dollar, 61.8 back in the dollar from 104 to 88. That's 16. That would take us back to 97.98 in the Dixie.
Yes, exactly.
Okay. What a great interview. I'm so glad I reached out to you. You know, I do this randomly on Twitter sometimes. I'll just see a tweet that's interesting to me and, then go to your Twitter, see what your stream looks like. And I'm so glad that, I clicked on your name, Corn. It's a great, was a great interview with some very important macro stuff for people to be aware of.
I really want to tell you that this was my first ever. So excuse if I was a little bit on my nerves. This was my first podcast interview. Normally I just speak to people in Johannesburg, see them,
Well, now you're a global star. So and I'm proud to call you my trading warrior brother. And really a pleasure. Really a pleasure.
And I really hope to do this again.
Oh, it'd be fun. We will do it again. And the best way for people to follow you, Corn, your Twitter handle is CSMIT29. Is that the best way for people to get a hold of you?
That's the best way for people to get hold of me. They can simply just connect with me there. I will always answer every message I find. Okay. Maybe sometimes on the weekends a bit slow, but during the week, always on time.
All right, buddy. So thank you so much. I hope pips rain down on you during the spring trading season, and really was a pleasure meeting you, and thank you for edifying the community and crystallizing a few things for me too. Thank you
Thank
very
you.
much.
Been a pleasure.
Good hunting. Good hunting.
Thank you.
All right, Faith, that's it. I'll see everyone for Turnaround Tuesday. Remember, Corin's handle is at C like Charlie, S like Sam, M like Mary, I like I, T like Tom, 29. You got it? Okay. Remember, don't just count your pips, count your blessings. See everyone tomorrow. Good hunting. Thanks again, Corin.
Thank you. Thank you so much.